This conference will now
Good
be
day, everyone. I am
recorded.
Steve Szymanski on behalf of Wealth Foundations Northwest. I'd like to welcome you all to the Weekly Prepper. Happy to be here with all of you. Just a quick reminder that your trades are yours, not ours. We don't act as advisors in any way, shape, or form. If you'd like to learn more about what we do here, or if you'd like to refer someone to what we do more, feel free to reach out either at our website or email directly to us at help@wealthfoundationsnw.com. Planning a normal schedule this week and a fairly normal schedule, I think, the following week as well. So, yeah, just as far as the eye can see, that's pretty much what's going on. Even though it's a short week this week, I decided to go ahead and rock some things out anyway. And here is an update on our seasonality. Still over the next month, still expect things to be weak through the end of June, then maybe start to turn the other way as we get to July. Now, of course, with so much geopolitical news, throw it all away. But for the most part, June has been pretty weak, and it's kind of in a range right now. And so I'll get to looking at the overall charts here in a minute. But the major markets bounced into range, okay, bounced back into range. And so things were looking even more bearish. Now, is this just a little bear market rally, or is it, kind of finding its footing completely, and it's going to be fine now, or it's really hard to say. And when the markets get into a range like this, okay, let me just show you what I'm talking about. Look at the SPY right here, and you can see that there was like a change in tone here, really, since the beginning of June, just like the seasonality said, and we've bounced right back in the range. We even went through this potential buying area, went a little past it, but then ended up finding some footing down here. Just like I said, here's another buying area, and so it found its footing here, at least for now, and now came back into this range. And so now that it's in this range, you can see it butted up right against the 20 SMA. And so what do we do now when it's like this? And so what we do is we get our portfolio a little more neutral. We got a little bared up here this past week, but now we can see that we're kind of still in this range. So define that range, okay? Basically the highs and lows of these few candles here this past week, and look for a breakout either way. So if it breaks to the upside, then we're going to be targeting here the all times highs. If it breaks to the upside and fails, or if it fails, then we're going to be targeting back at the low end of range, and it can stay in that range for weeks or months even, right? But I would just kind of start looking at this range, the SPY, around 746 ish, and SPY around 722 ish, right smack between those 50 and 20 SMAs, simple moving averages. And so those can resist and support. And a lot of times when you get between those two, the then it doesn't go anywhere for a little bit maybe. So now of course the Iran deal news can change everything. Okay, so that's but watch what happens. Still technically, news, no news, whatever, no reaction to lack of news or whatever happens, just keep an eye on this range. And is it going to break to the upside, or is it going to break to the downside? And so remember, trading is about signposts, it's about key levels, and it's not about being some guru who's going to make a call. Okay, right now it's stuck in the between the two. Now the on balance volume, this purple thick line, is surging. Okay, so we'll see if the momentum kicks in, but at the same time, the volume is not real strong on this bounce. So caution is still warranted, but our portfolio is a little bit more bearish, is definitely on the bearish side at the moment. We've closed out a lot of wins and everything, and we've gotten out of a lot of bullish trades now on this bounce. And so we're now sitting more bearish, and we probably should balance that. So that's what I intend to do with our particular portfolio. So the unweighted RSP, unweighted, what's that, Steve? That's where all the sectors are equal weighted. The RSP is actually breaking out to new highs. So no such problem on the RSP. So if you want a broader market, um, then something that doesn't look as choppy but looks more bullish, then you could actually play the RSP, the equal weight ETF for all S&P 500 sectors, if you want something like that, because the money's not disappearing, it's not drying up, or not crashing and burning. Just like I said, we are hanging in there. That's just there's been a rotation out of some of the AI trades. Okay, so SpaceX IPO did make Musk a trillionaire. And if the government would just confiscate maybe 1 trillion of his wealth, they could run the government for 50 days. So, just do we want? No, anyway, let's not worry about that. Okay, so economic reports are mixed. The CPI was a little bit better than the PPI. Either way, it didn't seem to matter. The market didn't care. Consumer sentiment and jobless claims were okay last week. Not great, not perfect, but just didn't matter. Didn't matter is the point. Market. They were not market movers. Our overall performance was good. The SPY was up 0.6%, the RSP up even more. The Qs held in there just fine, but Russell actually led the way, believe it or not. The small caps is a sign of a feistier market, right? And so that was, and they're going to be probably a little more inflation sensitive. So when oil starts to come down 6.1%, that can only help interest rates, which is better for the small caps, and that's probably why they're rallying. Gold still struggling. Gold down 2.5%, but Bitcoin's bouncing back. So some of the people looking to hedge may be heading back into Bitcoin. Bitcoin may be the new hedge coming. Here's IBIT, the new hedge of choice. But are we ready to sell the farm and put all our money in Bitcoin? No way. I mean, it's just could just be a little bear rally here, but it could be the beginning of hammering out a bottom near these 52-week lows. That could be the case. Whereas gold. See how I told you about this descending triangle, right? I told you about the descending triangle. It broke out to the downside just as I thought. Now we're going to target even lower, I think, on gold for now. I'm not in gold right now, but if I were, I'd be probably leaning bearish here. Not seeing any major support to hang my head on at the moment. We could go back to this level, drop base, rally. Maybe there's a little support in here, maybe not. But once it closes this gap, we'll see if that resists at all. Okay, if it closes that gap. So gold is still weak, and so don't be a gold bug at the moment. The strongest sector is materials, staples, and tech. Last week, the strongest sectors were materials, staples, and tech. A little bit of a bounce in tech again, but not necessarily all the AI stocks. And the weakest were energy and communications. So if you look at the groups of sectors and how they're rotating, okay, it's important to do this at least once a week. Take a look at this and see that 1 day performance, yeah, it is what it is. But over the last week, consumer defensive, financial, real estate, these were doing pretty well over the last week. Technology doing okay. Communication services really in trouble, and a lot of that is made up of Meta and Apple. By the way, Meta and Apple didn't have such a great week, and so over the last month, really, healthcare has been a little bit stronger. So if you look at this was the daily, but I really wanted to look at the weekly. Let me get the weekly for you. I think I accidentally got the daily for you, but that's okay. When we go to finviz.com and look at this is the 1 day performance. This only shows Friday, but what I really wanted to show you, if you change this to weekly, you can see very clearly that these mega cap stocks were not leading the way at all. That's why the RSP outperformed. Where we did get a bounce in tech was in this very strong area of semiconductor equipment stocks like LRCX and Applied Materials, held up very well. Semiconductor bounced back for the most part, but more the memory stocks. Okay, I used to work in semiconductor, and so more of the memory stocks and some of the computing, processor stocks, things like that. But the big Nvidia AI play was not the big win. Not that Nvidia is doing badly. Actually, the valuations on Nvidia are not bad. You would think they'd be way, way overvalued, but I think long term, I don't think Nvidia is a bad play, in terms of valuations. It's just that the momentum isn't there right now unless it can manage to hammer out a bottom here while you're making lower lows and lower highs. Not the time, and below the 50 SMA, probably not the time to, you know, go all in on this either. But I'd be watching Nvidia to put in a bottom because I think eventually it will. I think eventually it's going to start coming back, and I think it's going to be a buy here at some point. Going to be a strong buy at some point. All right, a look ahead. Stronger footing, but still chopping in range. Watch for breakout, follow through in either direction. Deal or no deal on Iran could make a big difference. It's going to be a shortened trading week. Okay, so it's only 4 days of trading. Options will expire on Thursday this week. So just be aware that you could have some lower volume trading this week. Not a lot of news. Nothing Monday, Tuesday. The only thing really of note is the FOMC meeting on Wednesday, but it's going to be a big nothing burger. They're not doing anything with rates. Everyone knows it. So I don't see that being a huge market mover. Could be wrong. They may say something. Probably they're not going to do anything, but they may say something. And you never know, could move things around if the market is so inclined to be moved. And so the jobless claims in Philly Fed on Thursday, very pedestrian stuff. Absolutely nothing on Friday with the market closed. Not the earnings is almost nothing. I mean, it's you're scraping the bottom of the barrel, even saying these are key earnings. So there's not much here to move the markets, is other than the Iran deal. Maybe the FOMC, if they happen to say something bold and outrageous, like we've done 3 more cuts this year. Well, yeah, that could move the market. Yeah. So rating the sectors this coming week, just looking at the tech, looking at the how the charts are lining up. Looks like financials and real estate and healthcare should remain strong, and certain parts of tech. You got to be a little bit selective, be a good stock picker within tech. But yeah, some parts of tech are still holding up very well. And then the weak sectors are utilities and communications. Watch for Apple to bounce back. Not so sure about Meta, but I think Apple has more potential to bounce back, and that could change. But for now, those remain weak. They were weak last week. Said they'd be weak last week, and they were, and they're weak again probably this week. You can see almost nothing going on with the earnings, and especially nothing the first couple of days of the week. So nothing much to move this market really. And so anyway, if you're interested in learning more, go ahead and reach out. Please, love to hear from you. Okay. Even if you just make suggestions about things you'd like to see in these little weekly updates, I'm open to any feedback you may have. All right, so here's our portfolio right now. Just a couple of things, and they're both bearish. So if we look at NEE, NEE, okay, and so this is a bearish spread we've got going on. It's just at the top of a low base, and we expect this to come down here and test the bottom of the base again. It's actually in a bearish boing boing if you're interested in playing the boing boing, but we're in it as a spread trade, and this is actually a horizontal spread trade. So this week, that short's going to expire worthless. We'll be looking to roll that for more credit and keep this trade on track. SPY is, very so we got a little bit bared up on SPY, and then that didn't ended up not following through like we thought it might. So again, we could go back to the bottom of the range, and this trade may still play out. But since I've got it there, I'm going to leave it in there a little bit longer until we're more sure of this. That's a short-term spread trade, not that expensive, but it was just something we put in there in case things fell apart, which they haven't done. But let's add a couple of bullish things to the portfolio. Bring a little bit of bullish balance to the portfolio. Now, you mentioned Apple. Apple actually showed up on my boing boing screen, but I don't think it's a good boing boing. It's just too weak. So let's not do that. I also see IBM on here, but again, too much downward momentum. to call a big bounce or boing boing on that. So no, I don't like that. Snowflake week. Looks like it's almost at the top of a gap, and if it enters that gap, it could really fall apart. So it's a little ahead of itself. Rocket Lab, same thing. So a lot of these are not what we're looking for with classic boing boing trades. What we're looking for with a boing boing is going to be something more like it's going to be something more like this, where we get like not a big deal, not one of these where it runs up like we're not looking for that. We're looking for something more regular type pattern, and those are not it. Maybe something boring like Clorox by CLX or something like that. Maybe, but no, it's still too much chop. And so I don't see a good boing boing out of any of those candidates. Let's look at maybe one or two more. MDB, maybe. MDB, it's still too frisky. We're looking for small moves, boring moves. Here's something called Inbix. That's more of what I want. Okay, that's more of what I want. Just a little pullback to the 20 SMA. And if this is liquid enough, I think I might take a boing boing on this guy. Certainly has upward momentum, has pulled back to its 20 SMA. Maybe let's take a look at this. Let's window shop. I don't like that it closed on a low. Okay, but it did pull back to a moving average. Let me just take one quick look here, see if I like these spreads, and if they're too wide, then I'm going to move along. I don't trade index very often. I'm going to go up to the monthly, look for a call 35 to 45 delta. Yeah, those spreads are too wide. $2 wide. Yeah, forget it. That's what I was afraid of. Never mind. Okay, so that's okay. I'm still going to look to LRCX. This one I know we can trade. LRCX. This is that semiconductor business, semiconductor equipment business. Okay, and I kind of like this as a maybe some kind of a um, if we could let me check the implied volatility. If the implied volatility is high enough on this, might do a bull put spread. Um, Yeah, maybe a bull put spread right here. I wonder how that would pay because it's pretty expensive stock. Um, and so I want to give it some room to pull back. So maybe if I did a 350 bull put spread, let me just see how that pays. That way, if it comes in a little bit, that's okay. And I'm just going to try to do more of a theta decay trade, especially with a short week coming up. And if it goes into the weekend, that would be okay. So let me look at a 350 bull put spread on LRCX. One of those high probability trades, and yet still bullish, right? Still bullish. So if I sold the 350, okay, and bought the 340, so sell the 350 and buy the 340, just a 10 wide spread, okay, that's a 445 credit. So um, that's that's incredibly good. 350. Did I do 350? That's too good to be true. 350, 340. And that 350 has a delta of, okay, this is too good to be true. I don't know why this is paying so well, but it is. Only a 36 delta. So only a 36% chance that short is threatened, and yet they're going to pay us $4. They're seriously going to pay us $4. That's out. Well, that's going out a month. That's going out a month. That's pushing it for me, but that's a lot to pay. And it's going out a whole month. There must be an earnings report. Let me check that. And when I say it's too good to be true, I've been doing this a long time. So yes, there is an earnings report. Yep, I knew it. So I know it's just a dividend payout. That's just a dividend payout, not an earnings report. While this one pays incredibly well, I don't need to go out that far. I'd be happy getting $2, but having it expire sooner. But the problem is if I go to if I go to a weekly, I'll have really wide spreads and the trade will become too inefficient, I'm afraid. Um, let me just look at the June monthly real quick. June, let's have one expire this week. Oh my gosh. All right. Seriously, this is going to pay me 250 on a 10 wide, expiring this coming Friday? What am I missing here? All right, this is a really good trade. June 18. I got to look at this three times, make sure I'm doing this right. Selling the 350 put, and current price is is around what? Current price on this stock is 366, so we're $16 out of the money. Okay, with lots of upward momentum. Sure, it could pull back a little bit, but we're only at 4 days from now. Only 4 days from now, they'll pay me the delta on that is 36 again. 36 delta. So the odds are in my favor. They'll pay me $2 on a 10 wide spread. That seems really good. So good I want to do it twice. Let me do it once. All right. So we'll go ahead and do that. So one good bullish trade, and it's even moderately bullish. It's neutral to bullish trade. We'll put that on for at the mid 250 limit. And there is our one trade. And the only other trade I was thinking about being bullish on is BE. BE. Just trying to balance the portfolio. I don't like this. I don't like this pattern so much, though. Now, lower lows and lower highs. This is against my religion. I'm not taking that. Let's look at something sideways. Here's Mo. This is kind of sideways in a kind of almost like a pointless sort uh, of a sector. And I'm thinking like an iron condor would be too boring. I think I wonder if a 2 day iron butterfly or a 4 day iron butterfly would pay. How about a 4 day iron butterfly on Mo? And we'll go five wide. We'll center this at 72 and go five wide. This is not a trade for inexperienced traders, but if it's good, I'll tell you it's good, and then you can decide. So 72 will be our center point, 372. I got to make sure I get the right stock in here. That would help. 72 center point. So I'm going to buy the 78. Okay. These are go zero bid pretty high. I'm going to buy the 76. I'll be consistent, go five wide. So I'll buy the 76. It doesn't matter on the buy side. And then sell the 72 call. So that's a bear call spread, right? Sell the 72 call. Then I'm going to sell the 72 put. Control V. So this is going to have a slight bullish bias, I think. And then go five wide again here. So I'll go 67. I'll buy the 67. How's that? Oh, darn it. I accidentally touched the mouse and it messed up everything. So there's there's belong the 72. I don't want two. I just want one. Long the 67 put, short the 72 put, short the 72 call. Yeah, this is definitely skewed. So it's not as neutral as I'd like it to be. And then long, I don't know, the 74. Let's go 76. Long 76, just to be consistent. Pays 174 credit on a five wide. Is it a five wide or a four wide? So on the put side, um, so yes, I'm short the 72s, and I'm four wide on the call side, and I'll make it four wide on the put side too. So I'm gonna bump this up to 68. Okay, so 173 on a four wide. That's almost a 1-to-1 reward to risk, and not bad for 4 days. And I'm gonna trade that small. I'm gonna trade that kind of small, but I think it's going to stay in that range. And so, yeah, let's just trade it small. Iron fly, iron butterfly, credit spread. Okay, let's try that and just have fun with that. Okay. All right, that's all I got on behalf of Wealth Foundations Northwest. Been my pleasure to have been your coach today. Good luck at trading, everybody. Take care.